Hello my fellow investors and welcome back to another earnings report analysis. And this time guys, as I promised, we will be covering my favorite company ever, Broadcom, because they just had earnings today. And wow guys, it was quite an earnings report if I do say so myself. We're going to take a look at that in just 1 second. But before we do that guys, take a look at this share price. Pretty much throughout the whole entire day, it actually fell at around 1.42%. And then after the earnings came out guys, look at this massive pop of 2.2%, gaining $10.84 just from the earnings alone. And yeah, that can pretty much give you a guidance as to how the earnings did. So with that said, let's get started with this analysis. We're going to come here to the first Seeking Alpha article when it comes to this EPS, just so that we can see a very broad view of how they did. Broadcom non-GAAP EPS of $9.73 beat by 18 cents guys, and on top of that, revenue of $8.46 billion beats also by $50 million. And on top of that, the reason why they also popped is because of the fact that, well, they're actually very bullish when it comes to Q4's revenue expected as well. We're gonna take a look at that right now in their earnings report. Alright guys, we are over here at Broadcom's earnings report. I'm gonna leave the link to this website guys in the description below. It is pretty lengthy, but I would like to cover a couple of the few points first of all. And on top of that, also look at the CEOs and CFOs notes when it comes to future projections. So starting off guys, we got a couple of the points here is cash from operations of $4.4 billion. For some reason they have this very weird, but I'm fairly certain this is $4.4 billion for the third quarter. Less capital expenditures of $116 million resulted in $4.3 billion in free cash flow. So they're already telling us guys that essentially their free cash flow is very good. And you can even see that the free cash flow was essentially 51% of their revenue. Quarterly common stock dividend of $4.10, which you know I love this number. Fiscal year of 2022 annual common stock dividend of $16.40 per share. So they're essentially keeping the dividend the same as of right now. Revenue of $8.4 billion for the third quarter, up 25% from the prior year guys. That is insanity. The revenue growth actually grew in 1 year 25%. That is absolutely insane. GAAP net income of $3.1 billion for the third quarter. Adjusted EBITDA of $5.4 billion for the third quarter. GAAP diluted EPS of $7.50 for the third quarter. Non-GAAP diluted EPS of $9.73 for the third quarter. We just saw this when it came to Seeking Alpha's article. Repurchased and eliminated 3.2 million shares for $1.8 billion. Guys, that is absolutely crazy. Think about them buying back $1.8 billion worth of their shares and just completely eliminating it. That makes it easier for them to pay out this dividend overall. Now looking at this next point guys, this is the one that pretty much brought the entire market up, in addition to everything else that we have just read. Take a look at this. Fourth quarter revenue guidance approximately $8.9 billion, an increase of 20% from the prior year period, meaning that if things keep going the way that they're going, and in accordance to them, they're going to make an increase in their revenue of 20% from Q4 of 2021 to Q4 of 2022. So that is absolutely massive guys. And then on top of that, fourth quarter adjusted EBITDA guidance approximately 63% of projected revenue. That is absolutely insane. Everything here guys is very rosy. So let's actually come over here to the graphs just to see this a little bit more clearer. And we can see over here that, well, the revenue again, it was around 25% change, 8.5 billion as opposed to 6.7 billion Q3 of 2021, as I said, increase of 25%. Net income, it was essentially 1.8 billion last year to 3 billion. That is an increase of around $1.2 billion. And then the earnings per share came out to be $7.15, not diluted. This is the GAAP, $7.15 as opposed to $4.20. That is an increase of almost $3 on the year-to-year change, which is just insane. Now, when it came to the non-GAAP, we can see that nothing changed for the net revenue. However, the net income, it was a change of around $1.1 billion. And when it came to the earnings per common share diluted, it was a change of $2.77, $9.73 as opposed to last year, which is $6.96 per share. Also, guys, look at this cash flow from operations. They even do the cash flow as well. We see that Q3 2021 they were at 3.5 billion, and then Q3 of 2022 4.4 billion, increase of $883 million. So guys, as we can see, this is pretty amazing. Let's actually read a little bit on the CEO's comments about this. So we got Broadcom Inc., a global technology leader that designs, develops, and supplies semiconductors and infrastructure software solutions. Today reported financial results for its third quarter of fiscal year 2022 ended July 31st, 2022, provided guidance for the fourth quarter of its fiscal year 2022, and announced its quarterly dividends. So quarterly dividends basically hasn't changed at all. But nonetheless, we just saw up here that the fourth quarter of guidance is looking really, really good. They're expecting an extra 20% increase from their prior year, which is crazy. It goes on to say, quote, Broadcom's record third quarter results were driven by robust demand across cloud, service providers, and enterprise, said Hock Tan, president and CEO of Broadcom Inc. He continues to say, quote, we expect solid demand across our end markets to continue in the fourth quarter, there it is, reflecting continued investment by our customers of next generation technologies in data centers, broadband, and wireless. Right then and there, guys, that is pretty much telling the markets, yo, Broadcom is just not going to stop. It's a behemoth and it's not going to stop. Next, we got a couple words from the CFO, where she pretty much just said, quote, consolidated revenue grew 25% year over year to 8.5 billion and operating profit increased 32%, said Kristen Spears, CFO of Broadcom. We generated $4.3 billion in free cash flow and are expecting free cash flow to be strong in the fourth quarter. We remain committed to return excess cash to shareholders, and in the third quarter, we returned $3.2 billion to shareholders, including $1.7 billion of cash dividends and $1.5 billion in share repurchases. Guys, that is absolutely amazing. Not only have they said that, hey, we're thinking that we might continue to be strong in the next quarter, but you know what? We're doing so good. Yo, we are going to keep issuing that dividend and we're going to be buying back shares. So we're on this. We're absolutely on this. So all of that, guys, really, really solid. So now, guys, let's come back over here to the discounted free cash flow because, well, this pretty much changes everything. I mean, we got that they're buying back shares, or at least they seem to be buying back shares in the next quarter as well. So we can pretty much just say that they'll be buying back shares at a more than 1% in the next upcoming upcoming years or so, assuming that everything remains the way that it is. And on top of that, we have seen that the revenue growth is also increasing a massive amount, as well as their cash flow. So if we actually come back here to the growth tab, guys, remember last time it was on the forward at 13.29%, and I was just like, there's just no way it can grow that much. And at the highest, I put it at 9%. After seeing this, guys, I don't know. I'm definitely going to have to redo this. So let's actually start with the projected share buybacks because we know that they are buying back shares. So instead of 1%, guys, let's say for the highest, let's say around 5% in the next 4 years. Again, remember, this is in the next 4 years. For the medium one, guys, let's actually go to like 4%. And for the lowest one, let's go at around 3%. So I've really increased my projected share buyback assumptions a significant amount. Now for the revenue. Okay, so before I had it at 5, 7, and 9%. Guys, after seeing this, these are way too low. These are way too low. So for that reason, guys, I'm going to have to bump it up by a pretty good amount. So I'm actually going to put, now for the low assumption, let's say 7%, or actually let's go with 8%. For the median assumption, guys, let's go up 3% to 11%, and for the highest assumption, guys, let's go up another 3% to around 14%, which is pretty much in line with Seeking Alpha's growth tab at around 13.29% and the year over year at 7.38%. So guys, with all of that and a required rate of return still of 10%, guys, well, now the target share prices are $550 for the low assumption, not adjusting for debt. Median, it is $614.40, and the high one of, look at this, $684.58. Adjusting for debt, it goes now from $495 all the way up to $629, and then the margins of safety, you got $421 to $471, $475 to $531, and then $534 to $597. Okay, guys. This is telling me that at the current share price of $492, and again, it is a little bit up after market because of the fact that they did have amazing earnings. Yeah, guys, this is looking like it's a steal right now, which is kind of mind-boggling, seeing that even at $502, which is currently aftermarket, it's still a steal, seeing that at the lowest, it is $421 with a 15% margin of safety, right? And at the highest, it's $684. To put this into perspective, the 52-week range, guys, is $677. So yeah, like they actually reached their, or at least by my highest assumption, pretty closely just this past year, which is insane. And I was saying that that was expensive back then. Well, fooled me once, I guess, but you know, as it stands right now, $684, guys, really expensive in my personal opinion. But according to the discounted free cash flow, if you believe that they'll grow at 14% and do a 5% share buyback in the next 4 years, guys, this is a steal. This is a complete steal right now. So yeah, that pretty much does it for this video, guys. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. Always remember that this is not financial advice and that every investment is the present value of all future cash flow. That's why I always have this calculator available for free. I have this one, the book value one, the REIT one, and even a dividend tracking sheet where if you buy this company, you can track your dividends with this company in that sheet. So yeah, all I'm asking for in return, guys, for these free things as well as daily free content is just help me grow my channel. Like, subscribe, comment. It really does help overall. We're very close to 1,000 subscribers, and you know, the more people that subscribe, the more people that comment makes me motivated to make videos like these. And apparently you guys definitely do seem to like the earnings report analysis too. So yeah, so guys, as I said, like if you like, comment, subscribe. It really does help with the algorithm on YouTube. Thank you so much for everybody who have. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out and be on the lookout for the next video.